Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for December 8th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We had a huge rally that came in the latter part of yesterday's session. We had an early quiet session where price was mainly trading around 22.13s, 22.12s, 22.10s, and eventually we got a big time break right through 22.14. This is why 22.14 was so important. It was the 50% expansion of a key range. I believe that's the Brexit key range. So from this Brexit high, 50% up is that key level. That's where we were holding this entire time. And then when we pushed even higher, that was actually the election key range, 50%. Now up here, the 22.40, that's a level that we've been talking about for some time. So when I mentioned when price was back here, back in early November, late October, I said if we push to the upside, we could break and run into 22.14. We got within a tick or so there. And if we pull back, we want to hold those highs for a shot at 22.40. 22.40 is actually the 50% expansion from the August 2015 key range. And that's why that's been very, very important. So we have now reached that 22.40 level, reaching a high today of 41 quarter, or the previous session of 41 quarter. The day after a trend day is usually a day of digestion, where price usually trades in a small range, so it's a fade the highs, fade the lows type of day. For the most part, it's safest to buy pullbacks to fade lows because we are in an uptrending market. You can fade new highs, but you got to be very, very careful. So day after a big trend day or a big move up, you usually see a digestion day, so just keep that in mind. The next set of key levels above are going to be 57.5 and 76.5. But right now, we're currently right at a key level. We'll see what happens around 22.40. All right, let's take a look at the intraday time frame. Here's the intraday time frame. So far, what you've seen here is exactly what we mentioned after a trend day. You get a big trend day up. Then the session that follows is usually a digestion day, a smaller range digestion day. Usually starts with a little bit up, a little bit down, a little bit up, a little bit down, a little bit up, a little bit down. And it'll keep going out, perhaps expanding, perhaps finding a nice natural area of support and resistance. But for the most part, it's a digestion day, a flat VWAP, so nothing really to speak of in terms of VWAP. Very, very flat there. And that tells you that rotations outside of value here. So any push outside of value, you can push this thing right back to value. VWAP and VPOC are virtually the same right now. So a digestion day trading range approach for EES, at least early on, with an upward trending bias. Okay, let's take a look now at CL. Here's the CL. We have the higher time frame chart, the daily time frame with the weekly PivotBoss pivots. Again, 52s proving to be a major area of resistance. We had a major rally from 43s. It didn't matter. We came back and dropped into 42. We had a major rally from 42 into 52s. It doesn't matter. We're already trading back below 50. So very significant movement. Again, very orderly push away from 52s with a rejection off the mid on the following session and lower highs, lower lows day over day. And again, the yesterday session, lower highs, lower lows, and again today, lower highs, lower lows, hanging around the midpoint of 50.5. So right now, very important how this thing has just hit right into 52. We saw a rejection, and again, we've dropped downward. Now, one thing to keep in mind, these reversals have been more complex. They haven't been V-tops or V-bottoms. By complex, I mean that there's multiple rotations before you see a move. So right now, any pushback above 50.5 would suggest that we will retest these highs, either higher high, lower high, reject double top, and then perhaps gun for value. But at the moment, as long as price continues to be offered at 52, the expectation or the implication would be that we would return to value somewhere into 46.80, perhaps 48 at the high end, 45.60 on the lower end. That's value, and right now we're outside of it. So for the moment, we could be headed toward this zone, but beware of a short-term pullback or shakeout leg ahead of that drive into value. Now, if we look at this thing on an intraday basis, we'll bring up the intraday chart. Here it is. 50 is a playing key level. 50 half is a key level. So watch these levels very closely. The market is watching them. You can see the rotations off of these levels very close or thereabouts, where it's trying to negotiate off of these zones, bulls and bears doing business around those levels. So keep those levels in mind. Again, if price, after failing to hold below the previous session's low and working up off the close, holding on 50, that would suggest a test above 50 half here. And if price can hold above 50 half, that could lead to more strength ahead. But if there's any rejection at 50 half, you can see the market is rejected there many times already before. If there's any rejection up here, it could be a quick fade back down. Right now, we are in a balanced market on an intraday basis. So you can see right here, this is the intraday profile, the current RTH or ETH profile. And it's perfectly balanced. So that tells you fade the edges is the right approach at the moment. But again, if price pushes above 50 half and begins to hold and find acceptance, we could see further strength back toward 52s. All right, let's take a look now at gold futures. Here's gold. If we bring up the higher time frame of gold, again, I've mentioned before, gold is very tricky. It hasn't found much of a bid. It's clearly trading outside of support below 1200 and 1180, but it really hasn't extended beyond that. You know, it's forming kind of a box almost. And so down here, this is the lows of support here of the entire year. This is major area of support, major CLVN. Price is trying to hold in this zone right now. So again, let it trade around this area, let it do its business. But if price starts to push above 1200 here and find acceptance, that could be the call that all of these late sellers here are about to get their stops run, and you could see the moves back to value. Otherwise, any failure to test 1200 or to find acceptance above 1200 could lead to another leg down. Remember, I don't think the gold market really wants to go lower than where it is, because if so, there's nothing. There's clear air between here and 1040 and 1060. So it's a far way down. But obviously the market can do that. So it can do anything. You got to be prepared for anything. Right now, I don't see anything clear. It's a it's a market that's very difficult at the moment, but it is building energy for a true move to come, especially with an inside week building from inside Monday's range. So something more could come, but right now you got to be very careful. Here's the NQ. The NQ was picture perfect off of our pre-market analysis yesterday. Here was our pre-market idea, was that after pushing through this high and going bid through it on Tuesday and Wednesday, we were looking for bulls to defend any rotations into 47.60 or thereabouts. Price came its closest to that area yesterday, getting very close into 45.62 or 3 or wherever, and then from there eventually broke through two-day highs. And that's what I mentioned. If you break through two-day highs, you easily get to 48.40 with a shot to rotating to 48.80. So our idea yesterday was perfect. It was right on the money. You never know that a huge trend day is going to result off of it, but we were able to follow that intraday reversal live in the trading room. We saw great selling balances down there on those lows, and we saw it easily work its way higher off that zone. And then by the end of the day, the thing was smoking hot. So what a big time move. Again, anytime you have a big high range day like this, a trend day up, imbalance phase, driving price discovery phase, the next day after tends to be a day of digestion. So that means fade new highs, fade new lows in the trading range around 48.40. Pullbacks are likely to be defended by bulls, and given the current trend, are safer to defend a pullback on the way down than it is to sell highs. This thing could still rotate into 48.80, but we know exactly what happens once we get above that zone, as we call it the last sell-off off that area. So right now looking good. I would say today again could be another digestion day after a big trend day, at least a digestion morning, which means this morning could be rather boring. And so right now you can see intraday just kind of fading back and forth. Here's the intraday profile, balanced D-shaped profile. So new highs likely faded back down, new lows likely faded back up, especially around this LVN. Keep in mind, the trading range is not going to stay this tiny, right? So that's where the expanding nature comes out. In order to get its full range, and then trade off that range. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.